Alphabet, or GOOG or GOOGL, Google Stock, is ripping higher in the after hours when they reported their fourth quarter 2021 monster earnings results. We'll talk about their earnings results in just a moment. Investors are wondering, however, is the stock still cheap even after this rally? I'll talk about their valuation in this video as well as their earnings results. If this is your first time tuning in, my name is Daniel and you're watching Unrivaled Investing, a no-hype mission-focused channel trying to find you exceptional companies and unrivaled investments. In full disclosure, this is not financial advice, and at the time of this video publication, I did own stock in Alphabet, GOOG. And so in the last few weeks, when Mr. Market was panicking about the Federal Reserve and tightening monetary conditions, it seemed like an opportunity, in my opinion, to scoop up some stock in a few companies. Google was one of the investments I made personally. I called it out in this video, calling out effectively I'm buying Alphabet stock. The stock is reacting favorably after hours, up about 9%, following their very strong results. 32% growth year over year and improving profitability driven by lower losses in their cloud segment. So there's a lot to like here. They also announced a 20-for-1 stock split. Personally, my thoughts on stock splits is that it's the equivalent of cutting a pizza into more slices. You know, at the end of the day, you don't get to eat any more. It just smaller slices. However, I recognize it does generate some retail buzz and greater accessibility to their shares. So, you may get a little more animal spirits tied to the stock because of it. Diving into their results, it's just a thing of beauty. It's beautiful. Google search and other properties up 36% year over year. YouTube ads up 25% year over year. Retail, they call out, was the largest contributor to their year over year growth in advertising, followed up by finance, media, entertainment, and travel. So when you think about all these things, okay, retail, finance, entertainment, travel, when you think about those different types of things, this means that Google's strong results are tied to the economy. So more activity in the economy, a hotter economy, plus, higher inflation does result in better results for Google. That said, it does work both ways. That said, if the economy turns south, I would expect some headwinds for Google and the stock as well. So this is something to be mindful of as you do face monetary tightening in the quarters ahead. Google Other, which includes the launch of their Pixel 6 phone, that posted 22% growth year over year, and Google Cloud up an amazing 45%. It's amazing to think what they're powering here with Google Cloud. Very clear that they're incrementally taking market share, powering the likes of someone like Shopify, almost like the anti-Amazon, and all the e-commerce that is enabled by Shopify is effectively powered by GCP or Google Cloud. So that's really incredible to think about. While these numbers are absolutely critical to the thesis of Google and understanding the fundamentals, you always have to understand the fundamentals, in my opinion, to be able to underwrite a stock. There's a lot more that you need to know to understand the Google story, in my opinion. It's not just a financial number. You should understand, okay, so what's actually the value here? And despite whatever views you or many people have on advertising or Google, there's oftentimes some, it's such a big company. There's a lot of negative publicity or negative associations with it. Some major investors even talk about shorting the stock, which strikes me as very foolish. It really seems like they aim to be a force for good. For example, they call out on this, earnings conference call how nearly 1/3 of small business owners say that without our digital tools, they would have had to close their business during the pandemic. Think about the lives impacted here. This represents tens of millions of individuals when you think about that on a global scale. That might have been a U.S. reference, but still, just an amazing impact when you think about it, the impact on the economy. You can see this with how they're constantly improving search functionality, which includes whether a local shop has, let's say, an item in stock that shows you now when you're searching for something with a local store, or how 25% of the time they have the optionality for curbside pickup. So this is a business that's not just resting on their laurels. They're constantly innovating, offering better solutions that ultimately make it better for the end customer, the end consumer that's searching for a solution to something. And keep in mind, this isn't a company that they're not only just reporting good profits, but they're also minting free cash flow. Netflix. And maybe someone should tell Bill Ackman, he's recently calling out how great Netflix is. As, look at Google versus Netflix. They have a similar valuation, but Google has arguably faster growth, better free cash flow, actually has free cash flow, has much better balance sheet with significant net cash on their balance sheet and arguably more optionality. And we'll talk about some of that optionality in just a second. But, look at this, 60 billion plus in free cash flow in 2021. And during the year, Google also bought back 50 billion of stock, reducing their diluted share count by a little under 2% year over year. I'd ideally like to see greater share count reduction. Maybe we'll see that in the years ahead. Maybe it's affected by the timing of their stock buyback. So I do want to see that to make sure, wait a second, you're not just spending $50 billion and, share count's only being reduced by like 1 or 2%. That is a risk that you sort of do have that sort of pressure, that give and take that is worth considering. But look, this is part of one of the key aspects of a dream investment, in my opinion, is that when you have a company just generating oodles and oodles of free cash flow, that if the stock were to fall in half overnight, they have the optionality to act aggressively in buyback stock. And that is something to be mindful of when you're looking at something like Google. Okay, so the question that folks are asking is the stock still cheap, after this, significant rally in just the last few days? First, a quick plug where if you're interested in joining a community of fellow investors looking to learn and find exceptional companies, we have an exclusive community on Discord. You can sign up at unrivaledinvesting.com, click join the journey. I also call out potential multi-baggers and share my own personal portfolio for those interested. Once again, that's unrivaledinvesting.com. Click join the journey. If you enjoy videos like this, please make a point of hitting that subscribe, hit the thumbs up button. So before looking at their underlying fundamentals, it's worth understanding that little of their current results reflect the immense potential they have with artificial intelligence. With their DeepMind subsidiary, they are a pioneer in the field of machine learning, and they're increasingly marching to a future where artificial general intelligence might just be possible, where you have, potentially a super intelligent machine that, just changes how we live. For example, they mentioned in this call a new AI architecture called Pathways, where a single model can be trained to do thousands or even millions of different things. So just think about the possibilities, and that, in my opinion, is a step towards the pathway, towards AGI, I would think, when you can have the same sort of model be able to learn how to play chess or do something like protein folding. And that's a very tangible example where they have this, algorithm called AlphaFold, where it took scientists, this is a direct quote, it took scientists more than 50 years to figure out the structure of 150,000 proteins. The DeepMind team has now expanded that number to 1 million, and they think they will get to more than 100 million proteins this year. So they are quickly mapping out effectively reality, what makes up reality. And this is a pathway to developing new materials and technologies that in 30 years from now could make us look like we're currently living in the dark ages. The type of innovation that you can get from mapping this out can just be breathtaking. And so we'll see what comes of that. Now, keep in mind, you look at this and you go, well, wait a second, where is this being baked into their valuation? And so you ask yourself, is Google cheap even after it rallied? And assuming they grow, let's say 15% this next year, just looking at their Google services segment, and keep in mind, no one really has any idea how fast they'll grow, and I'll talk more about that in a second. They're trading around 25 times their core earnings for just their Google services for fiscal 2022. And that gives no credit to cloud, other bets, their cash on hand, the optionality of, let's say, AlphaFold, all this sort of stuff isn't really captured here. I'd argue 25 times for a business growing very quickly with significant free cash flows. It's not cheap, but it is reasonable. I mean, if you were to stick by a strict like Peter Lynch approach, he would argue it is cheap based on the recent growth rate and the PE multiple, because he's a fan of looking at a PEG ratio to under 1. And given that their growth rate is in excess of 25%, he'd look at this and might say, yeah, this is cheap. So you could cut this different ways. I would say this is very reasonable looking at it, but it does depend on the economy. If the economy hums along or strong inflation continues, they're arguably in a favorable position. I'd argue the biggest challenge, however, for shareholders is one of expectations. As I surveyed my followers on Twitter, the majority of which expect about 25 to 30% growth next year. I mean, this might be tough to hit. Now, look, yes, their core services business grew 40% year over year in 2021. That was a really strong year for Google. The year prior was 11%. Now, look, that had the main impact from COVID, but the year before that, it was only 16%. Now, you might say, well, now YouTube's a bigger part of the pie and they have different things going on in here. But if they end up, and keep in mind, their Google Play Store will also be impacting it because they lowered their fees. So if they end up growing, let's say, only mid-teens level, that might result in some sort of disappointment when a lot of folks are thinking, 15, 20, 25, 30%. And so this is something to be prepared for. This does create the risk that the stock could come under pressure if a lot of people are saying, heck yeah, this company should continue posting 25 to 30% growth. The reality is no company grows, straight to heaven. And here it is. This is a business that's already generating, 200 billion plus in revenue just from this one segment. This Google services segment. Now that does include a lot of different things like YouTube ad revenue, but it is worthwhile to understand. Look, it's really hard to keep growing at 30% a year. And that's the reason why when I'm looking at the valuation, I'm saying, okay, what's the potential that this grows, let's say 12.5 to 17.5%? What's the margins I want to assume? I'm effectively baking in the current margin structure for this business. Assume they continue growing at a similar rate over the next 4 years. So this all in is about 5 years. My tax rate might be a little bit high. I'm assuming 20%. And I'm assuming an N multiple 5 years from now, 15 to 20 times. Now, maybe you're saying that might be a little too low given how strong this business is. But just based on Google services, I'm saying, yeah, around 60% upside and about 10% downside. And keep in mind, this is a hypothetical valuation framework. Of course, stock prices can go way higher, way lower. A lot depends on the execution. If they're going to deliver growth faster than this and more aligned with what people expect, I would expect an even more favorable potential outcome. If they don't deliver on it, and let's say it's closer to 10 to 15%, I would expect the valuation multiples to come under pressure. So those are definitely things to consider. Look, they've done very well in a hot economy. And so the question is, will they be able to keep that up going forward? I'd argue while it's rallied, it's arguably still a very reasonable valuation with incredible optionality. I talked about some of the steps they're making with artificial intelligence and just the incredible breakthroughs that they're doing with AlphaFold. So if this video has been helpful for you talking about Alphabet stock, Google stock, please make a point of hitting that subscribe, hit that thumbs up button. Thanks so much for tuning in.